Hey everyone, welcome back to the Rent a Home Show. I'm Alfonso Salemi, co-owner, co-founder of Jag Properties and the host of the Rent a Home Show. I am super excited today to be sitting down talking with Cheryl Campbell. Cheryl is a certified financial planner. She's been doing this for over 15 years. Long relationship between Jag and Cheryl. Cheryl, you're such an amazing part of what we do here at Jag Properties. So thanks for sitting down and chatting with me today.
Thank you, Alfonso. Super excited to be here.
Yes, I often lean on Cheryl when it comes to financial advice, whether it's for our clients, myself, all types of people, anybody that's looking for financial advice. Cheryl is such a wealth of knowledge. But for those that haven't had the pleasure of meeting you or know about you, kind of give us a little bit of a background.
So I started in the financial service industry back in 2006. And at that time, I really wanted to support people and help them to get out of debt and build out a financial plan. Maybe rolling their debt into their mortgage, setting up a budget and moving forward. But what I found when I did that was that people have a hard time changing their habits. So as I moved forward, I really worked with people on changing their habits and behaviors and helping them to build out a way to incorporate that into their lifestyle so that they can become financially healthy.
That's awesome. And, over the years, we've had several different types of conversations on who the people are, right? And, there's not necessarily one segment or one type of person. There's so many different types of people. So, as, today's economy and, we're seeing it's becoming increasingly difficult for future homeowners to get into home ownership, right? To qualify. So maybe give us a little bit of an idea on the type of people or some characters of, the people that you're working with.
You know what? Honestly, it's a full realm of people. And are you speaking with Jag or just
all kinds? Yeah, all different types of
so
people, yeah.
I've got young people that are starting out that actually want to avoid going through what their parents went through, maybe not having enough money saved, so that they're saving money. Young people starting out, saving money, young families, and then the older clientele that are really worried about not having enough retirement because of the longevity that we have now.
Wow. So right from the age of getting out of school, thinking about retirement and not having enough. So it's a wide range of people,
Absolutely.
right? And didn't even mention, newcomers into the country,
That's
people
right.
that have had, life circumstances. And again, I get all this because I've learned this from Cheryl over the years. So a lot of what I talk about in terms of financial awareness, financial health is a lot from what you've taught me and what I've learned from you over the years. So those wide-ranging types of people that we're working with, younger people ready for retirement, newcomers, self-employed individuals, what do you see as a common problem or the most common problems that they're having when it comes to qualifying for financing?
The biggest thing is down payment. Yeah. Down payments. Up until June last year, the interest rates were great. They were low, but it was saving that down payment because that cost of housing has gone up substantially, and even saving 5% is difficult for people.
Yeah, and a lot of times when I'm talking to potential tenant buyers, or even joint venture partners, realtors, mortgage brokers, the whole gamut of different people that we work with, they always think I need that 20%. I need 20% down. I don't have 20% of a $1 million property. In some cases, or even 700,000 or 800,000. That's a significant amount of money. So maybe talk to me a little bit about the different down payment requirements depending on the situation for that person.
So basically, anything under 500,000, you can be okay with a 5% down payment. Then it becomes an insured mortgage. Then they have to have the insurance on the mortgage through CMHC. That's typically not a problem if you have good credit. And then anything over 500, you need that 10% down now, and that's a new rule. So people have to save a little bit more money, still having a good credit score. And then once you do absolutely need 20% down, that's for people that maybe they have a blemished credit score or they don't want to pay the CMHC fees, because that can cut into costs as well.
Yeah, so it's interesting. And one thing I'll add as well, again, something that I've learned is if you are self-employed or a small business owner,
absolutely.
The minimum of 10% as well, 10%, right?
Most lenders. Bankruptcies, consumer proposals at a minimum of 10%.
Yeah, interesting. Yes. Yeah, so obviously, and that just means the bank, the lender, they want a little bit more down, a little bit more security, right? From putting that deposit down when they're giving the mortgage for the rest of that,
Absolutely.
right? So
Absolutely.
awesome. So when you're putting together these plans, like you're saying, there's the down payment, there's the mindset. I know it comes a lot about how we were raised around money. You talk a lot about that.
Yeah.
So what kind of plans or what type of frequency are you meeting with different people, or what type of different plans that you put in place or things that you've seen that have worked for individuals?
So definitely some people need a budget. So we send them budgets, get them to fill it out, complete it over a month period, have them send it in, we review it and go over some ideas for them. A lot of times people don't even know where their money's going. And I was just saying to someone yesterday, because we debit everything, it's really hard to keep track. So we start with budgets. If people are looking for a full financial plan, like, will I be able to retire or will I be able to afford this? We'll build out a financial plan looking at assets, liabilities, that sort of thing. And then some people just want to talk about mindset. So going over those habits and behaviors that we learned from a very young age that we need to maybe change or redirect.
Yeah, and I've seen, and you've introduced me to a few different apps, and it's almost like bringing back like the money in the different jars on the counter and the kitchen counter, and now it's like a pie graph of how much am I spending on, I don't know, streaming services, how much on food, how much on. I literally got an alert on my my TD app that how much I'm spending on Amazon per month, right, as well too.
That's
So
awesome.
so it's interesting to see these financial institutions now actually tracking it. Kind of scary too, but interesting that information is being collected, but how we analyze it or how we review it. So I want to shift gears just a little bit here because we talked about the down payment, but credit, right? It's like this, I don't know, Sasquatch or Yeti of everybody hears about credit, or I have bad credit, or my credit score is this, but not a lot of people understand how that credit is made up. So, what would cause someone to have bad credit? You mentioned bankruptcies, consumer proposals, blemish credit, but what are some examples of people having bad credit?
Bad credit can even happen just from people maxing out their credit cards over Christmas. So say you've overspent and everything is above 75, maybe even at 100, going past that 100% limit, that can really lower your score. So utilizing your credit, you think it's a good thing, but really it's not, unfortunately. So overspending, missing payments. So if you think, oh shoot, I missed my payment, I'm a month behind, that really can ding your credit. Not paying your phone bill. Some people will walk away from phone bills. We'll see on their credit bureau that they had a FIDO, they were with Virgin, they were with Bell, and they don't realize that destroys your credit. It really does. It could be you are a student and you have missed your phone bill payment and you only have one credit card. That can take you down into the fours. So it's really just educating yourself on credit and little things. It's not rocket science, but it's something.
Yeah, and let's continue on with that, because I think with credit, it is so individualized to each individual person. So people have these goals of, oh, I'm going to go get a mortgage and I'm going to go qualify. I need to fix my credit, but they don't know what to do. So how long, let's say, even if you are diligent, you've had some blemish, you've missed some bills, you've gone over that limit, typically what kind of time frame, to get from, say, a 400 or 500 credit score, to get it over, and I think, and you can correct me if I'm wrong, over 700, usually most bank lenders are favorable to that. So say someone's thinking there, no, I have bad credit, I'm not going to, I'm not going to apply for a mortgage, or I'm not going to apply for JAG's rent to home program. I have bad credit. It's going to take forever. What is a typical time frame if someone is diligent or has a plan or working with somebody helping them with a plan?
So I would say if they have bad credit, but then we get them a prepaid credit card. So that would be number one. It's just utilizing the tools out there. So getting that prepaid credit card, using that for 6 months, and then maybe getting a second one. And again, it's building that up. And unfortunately, you need credit to build that credit, which can be a scary thought for people, especially if they've maxed out. So once you have that second credit card and you're diligent and you're paying those bills, then it may be a year to 18 months to rebuild that credit, or to get that credit high enough.
Okay, wow. So you're looking at a year to 18 months, but it's not impossible. It's not
at all.
It's not a death sentence, right? It's being diligent. It's following up, making sure you're making those bill payments.
Right.
So, and obviously, JAG's rent to home program pretty in depth, So from your expert opinion, with someone with bad credit or a first-time buyer or a new Canadian, do you think that JAG's rent-to-own program can help?
Absolutely. And I think people become a little bit apprehensive because they don't know what they don't know. So just them taking the time to educate themselves on what rent to own is and how that they can now have home ownership and be a homeowner within 3 years with staying on a budget, being diligent, maybe taking some, I guess, what would you say that when you're taking a little bit of a break from overspending,
Gotcha.
the specialties of life.
Yeah.
But
Focus on more on needs than wants, maybe?
absolutely.
Yeah,
You can have a home in 3 years. Like that's amazing.
Awesome. So, we're sitting here with, a certified financial planner talking about, this isn't the end. If you can't qualify, you think it's, impossible. The media is making it sound worse than it actually is. In some cases, it is pretty tough, but it's not impossible. So, without a program like this, or without, financial guidance or coaching, what are the chances of someone purchasing or buying a home?
It's a good question because honestly, I think a lot of young people are seeking the help of mom and dad right now. Like mom and dad or grandma and grandpa need to help them come in either with help with the down payment as well as probably co-signing the mortgage. So if they have that ability to have their loved ones help them, that's great. But other than that, without taking that time to build up that down payment, it can be a little bit difficult, especially with the price of rent.
For sure, but delaying is not the best strategy,
No,
right?
exactly.
So what would be your advice if someone is considering it or thinking about it, saying, hey, I want to own my home. I want to get into home ownership. I see the prices increasing. I see interest rates increasing. I don't know what's going on in this market. What's your advice to them today?
Educate yourself. Seek out those rent-to-own companies. Talk to them. Learn about their program. Ask people that are in the program. Ask them for referrals and just really find out what it's all about and how it can help you.
Awesome. That's great advice, Cheryl. Thanks so much for taking the time and being with me today. Guys, get in touch with Cheryl. Reach out to us at Jag Properties. We're here to help. We want to get you on that path of home ownership. So thank you so much for tuning in, and we'll see you next time.
Thank you.